dark Tuesday evening. Couple quick pointers throughout the session. Please keep your mic muted, and we will be recording the talk portion of this event and planning. We also plan to take some screenshots. So if you want to stay anonymous, just use your first name and feel free to turn your video off. But if not, more the merrier. And then this is usually structured as a talk, which we'll follow it with a Q&A. But feel free to post your comments, thoughts throughout the conversation in the chat, and we will collate them and take them at the end. With that, a quick intro to Women in Blockchain. Today, actually, we are collaborating with Women in Blockchain New York as well, and I'll let Tessie give a little bit of intro about that in a bit. But Women in Blockchain Boston is an initiative to increase diversity in the blockchain space, and we use various ways, various initiatives that we undertake. One of them is these educational series with some amazing women leaders in the space, and another one is a beginner's guide that we recently released. So if you're new to the space, definitely recommend checking this out. It takes you through the various concepts about this technology, various use cases, and it's a really good intro to the space. So definitely recommend checking it out. And if you want to reach out to us, you can reach out to us via our email or follow us on Twitter. With that, I'm going to jump into today's session, which I wouldn't say we are very excited about because tax is an issue we are generally not looking forward to, but we are excited that we are having this conversation and learning more about the nitty-gritties that come with dealing with crypto and DeFi taxes. Before I go and introduce our speaker today, we also have a special guest with us that I'm going to let Tessie introduce.
Yeah, I'm Tessie, Women in Blockchain New York, same mission. Yes, we want more women in the blockchain space. We had, I don't know how many live meetings, 40 plus live meetings in New York City. Now we're online and collaborating in the same time zone with Manassi this time. And yeah, I'm excited about the session today about taxes. That's one side. And then the other side is, that is also very interesting, is what Kim Grauer is talking about. She will talk about, in some ways, what is difficult about taxes and how to find out where your tokens are when you did tumbling and all kinds of other effects. And of course, it's probably also somewhat discouraging to hear like how easy certain privacy tokens are found and how easy everything is to and analyze. And I'm really looking forward to talking to Kim about some of the more complex issues in taxation.
May I ask a question?
We'll take questions at the end. Sorry, and if you want to put them in the chat while the conversation's going on, that's fine too. With that, Kim, do you want to just quickly say a couple words? Your background, what you do at Chainalysis, what is Chainalysis? Love to hear a couple words from you.
Yeah, definitely. Can you hear? You can hear me?
Yes.
Okay. I'm Kim. I am the head of research at Chainalysis. I have been at Chainalysis for over 3 years, which is actually a long time. And I'm one of the longer running employees there. And I have a background in economics and had previously worked for the mayor's office of New York in their economic research arm, basically doing cost benefit analyses for land contracts, but on the side kind of secretly doing some cryptocurrency research. And I even wrote one of their early blogs about Bitcoin, and now I'm really pleased to see that they are actually really involved in cryptocurrency now. They're co-sponsoring Consensus in New York City. And so it's good to see my former office kind of leaning into this space a little bit more. And Chainalysis is a blockchain forensic firm. We're the blockchain forensic firm. And what we do is I associate Bitcoin and cryptocurrency addresses with services. And that allows us to see what is going on the blockchain, how much activity is going in and out of exchanges or merchant service providers or darknet marketplaces. Our customers are governments, our customers are law enforcement, businesses, financial institutions, and cryptocurrency businesses. And each of those pillars use our software for something different but related. A law enforcement individual might use our software to track down a lead. So if they know that someone has, if they know that there's a cryptocurrency address that's associated with illicit activity, they will try and use our tool to investigate what happened. And then exchanges will use our tool to make sure that they're not accepting funds from terrorists or sanctioned addresses. And so right now we're in crime research time of year. So every January we put out a crime report. And so I'm, neck deep in crime research. And this year I'm excited to be adding a tax section to the report. And the data around that's tough, as we'll get into, so I hope to essentially teach you how to evade taxes. No, I'm just kidding. I won't teach you. You do have to know. You do have to know how to evade taxes, though, to track it down. So, if you want to know something. But yeah, well, so there's a lot of different tools that people employ to evade taxes or to, offshore their funds. And it's a tricky business to be in, but there's since this blockchain is transparent and permanent, it's actually more empowering than in some ways than tracking down tax evasion in the fiat world. So yeah, I guess that's my introduction, and I will pass it back to you.
Yeah, thank you. Looking forward to that report coming out in January. And again, thank you so much for joining us as a special guest today. She's going to stick around throughout the session and take on questions at the very end. And now with that, let me introduce our speaker for the day. Unfortunately, I think she's having issues with her video, but her audio is great. She's going to be able to share her screen, so it's going to be great. With that, let me introduce Barrett Strickland. She is the head of analytics and research at TokenTax. TokenTax is a crypto tax software platform, if you're not familiar with it, and it's also a full-fledged crypto accounting firm. She's built her career as a lead analyst modeling structured finance deals and portfolios at Moody's in her previous role. And she has a Boston rooting as well. She's an MIT-trained economist, and she began her career in research at MIT and Yale. With that, let's welcome Barrett here. Can you?
Yeah.
Okay, great.
Thank you so much. Yeah, I'm super excited for this opportunity. Thank you for having me speak on this. So I head up research and analytics for TokenTax. So as a tax software provider, we actually a few years ago also acquired a CPA firm. So we do both the tax software, and also then we can expand and do the full filing for anyone who has, royalties from properties or things that they have added, not just their crypto taxes. And then from that, we've sort of expanded outward, and clients will ask us for sort of accounting adjacent projects that we can, help them on an ad hoc basis, almost sort of on the consulting side, where, bookkeeping and things like that are very useful, especially in a growing nascent crypto industry. And we've seen, an increase in adoption this year, especially when people are a little bit worried about future inflation. I guess, so without further ado here, I'll sort of share my screen, because I'm sure you guys are here to learn about taxes.
That sounds great.
And can you see PowerPoint
Yes.
slide deck should be up and running?
Yes.
Yes. Okay, perfect. So just to give some background, just because I don't know, to gauge the audience, if everybody has ever filed crypto taxes in previous years, or if there's some people filing for the first time. This year, the IRS actually has a giant disclosure question that they're going to place, right on the top part of your Form 1040. So there's sort of no longer any excuse not to report your crypto taxes. Because they've moved that, right to the top of the, your primary tax form. And so, yeah, so the basics of crypto taxes are your taxable events tend to fall into two categories, either capital gains and losses or as ordinary income. So taxable events that fall on the Form 8949 for capital gains and losses are going to be if you sold crypto for fiat. So say you sold Bitcoin for US dollars, if you sold Ethereum for euros, all those need to be reported line by line and can incur a capital gain or loss depending on how the price fluctuation between the time you purchased it and the time you sold it. If you exchange crypto for crypto, if you were day trading cryptocurrency throughout the year, if you traded Bitcoin for Ethereum, that also is a taxable event. If you spent crypto for goods and services, so now, PayPal has launched that you can buy things with Bitcoin using PayPal, and I believe very soon they'll launch the Venmo version too. So if I walk down the street and buy a cup of coffee with Bitcoin at my local coffee shop with using Venmo, then I'll have to report that on my taxes. And
so if you want to play, you've got to pay.
Yeah. And of course, if you paid someone in crypto for goods or services, that also incurs taxes and needs to be reported as capital gains or losses. And then there's taxable events that need to be reported as income on your regular income tax form. So those would be if you were mining crypto, if you were being paid salary in crypto, payroll needs to be reported as income tax at the time of receipt. Staking, claiming crypto, and a lot of your yield farming activities are also going to be incurring income taxes. The nature of, if you're gaining governance or incentive tokens, a lot of those are going to be on your income tax reporting page on your tax forms. So summary of crypto taxes, the basics are just, it's either going to be in the US, capital gains, or ordinary income. And so as an economist, one thing that we do consider sort of on the sort of research and policy implication side of this tax policy is that typically we want our tax policy to be incentivizing innovation, right? In a high level overarching policy viewpoint. And the question is, if I want to purchase coffee in Ethereum and it's a $5 USD purchase, why is that something that, that I would need to report on my taxes? It does seem like there is this sort of tax burden that is also only in the US and some other countries. But however, the United Kingdom has taken a different approach where below a certain threshold, you don't need to report or incur taxes on your crypto transactions. And so there is this sort of policy discussion around whether the US tax policy for cryptocurrency is in line with, the fundamental idea that we want to incentivize innovation. And the question of